Today on Rethink Real Estate, we're going to dive into the insurance industry a little bit, and we're going to be having an interview with Andy Gurczak. Now, Andy is the CEO of AllCity Adjusting. He's an adjuster, is what we would call it. I asked him about that in the beginning of the episode, but it is fascinating to understand the role in which he plays within the insurance industry. I think this is a really interesting topic because from a property management perspective, but also from an agent perspective, if you're a listing agent of a property and you're building established relationships with people, you are kind of their property resource. And Andy shares a great deal of horror stories, but also a great deal of advice when it comes to dealing and ultimately making sure that people aren't saying things that in essence could ultimately end up in them receiving a far less of a claim. Really interesting, and getting his thoughts also on the different elements of what's going on within California insurance at the moment with fire insurance and different elements. But again, great resource for your network as well. Hope you enjoy the episode because again, I think it is very, very appropriate to understand this element of the business also. Welcome to Rethink Real Estate. My name is Ben Brady, and this is a real estate podcast aimed to deliver sales strategies, marketing tips, and business insights from industry experts and myself to build a listing-focused business for the future. Let's get into it. Andy, welcome to Rethink Real Estate.
Thank you so much for having me, man.
So this is a really timely topic that we're going to be talking about from an insurance industry perspective. Obviously, you're with the company AllCity Adjusting. And would you say that is your title like an adjuster? Is that your, like, how would you say that is?
Yeah. So the easiest way that I explain it to people, sorry, my desk is moving. The easiest way I explain it to people is we're a private adjuster. Like a private investigator, like your own tax accountant, someone privately that you're hiring that works for you.
Got it. Okay, cool. So one of the things that obviously I think this is very timely because in the insurance industry at the moment, there's several areas within the US that I want to focus on because there's some really interesting and intricate things that are happening in the insurance industry. And we'll talk about that a little bit deeper. But if somebody's listening and they're joining us at the moment, why should they hang around, Andy? What value are they going to get from the episode today?
Yeah, learn how to not get your claim denied and then learn how to get your claim double, triple, quadruple paid.
There you go. Well, I think that's valuable.
If that doesn't get you excited, getting your claim paid double or triple, then I don't know what else can.
I think that so one of the interesting parts from our audience perspective is that, they're realtors sitting in front of people in their biggest assets. The funny thing that I've always seen in the real estate industry is that they have to be sort of jack of all trades in the sense that they need to understand about the insurance side of things because they get asked all of those questions. They need to understand about the tax laws that are implicated when it comes to capital gains or whether it's an investment or whatever it may be. So this is, I think, something that, people will be able to sort of dive deeper into from a real estate perspective and be able to sort of shed some light on. I want to go straight into one thing though. I want to get your opinion of what's going on in the California marketplace of insurance companies leaving the state from a fire insurance perspective. Is there any precedent to this that you can show us from the past? Or, I know that there's, with the Malibu fires and coming into fire season, and a lot of them have justified as well that there's been a lot of rain, say in Southern California at the beginning of this year, that therefore it's going to cause a massive fire season come the drier periods. Like, are these things that people need to know about, or what is your opinion of this whole thing?
Yeah. So now with all the, I guess, change in whether it's temperature, whatever you want to call it, global warming, there's obviously, it looks like there's, houses have been built on probably places that they shouldn't build, like cliffs and areas that maybe aren't, there should be homes there. So now you have all this high risk. So now you got all these insurance pulling out. I mean, why insure people in this area? Get a little bit of more premium, and that their risks are double or triple high, that they're gonna have a loss. Yeah. So there's more pulling out. So this is not only happening in California; it's happening in other states like Florida, for example. Same thing. It's harder to insure your home if you're close to the water, and if you do, your premium is so much higher than anywhere else. Going in the future, I don't know. It's kind of, we'll see what happens if other carriers step up. And if there's a market that opens up to new insurance companies, maybe, with higher premiums, but, and again, it's not only their high risk. You have to remember, California is a very it makes life difficult for insurance companies also, right? There's just so much work they have to do and so many loopholes. Like they're always scrutinized. They can't do this. So there's a lot of pressure on them on that sense where, hey, why are we going to keep insuring? Where if we have a loss, not only do we have to pay up claims, but now, we're getting sued left and right for everything we do.
Yeah.
I think there's more than just, I think the risk. I think the laws and statutes that California has set has kind of pushed insurance companies out of the state. And again, I'm just speaking as you looking outside in.
Yeah, no. Well, again, so obviously the expertise that you have is when it comes down to the claims is to make sure that the insurance company doesn't take advantage of people, but it's also helping people protect themselves in the very first degree of things as well. So can you sort of shed some light on, first question would be, is that where do you see people underinsure, or where do you see people in the very beginning of things? Because you would get to see this most of the time. I would assume, Andy, that they would call you when things are going wrong, essentially. So at the end of the day is that what do you see the mistakes people make in the very beginning?
So what happens in the beginning, a lot of people start saying too much and start, telling their whole life story. And when you start saying too much and you say using the wrong terms, right? Using terms that the insurance company flags, saying too much and over talking, and now putting a file for the insurance company to give them more reasons to deny, right?
Right.
Hey, my building's been, you guys had a water loss. Okay, who's been in the building? Well, I haven't had any tenants. The building's been vacant for 5 months. Oh, okay, great. Well, that's technically per the terms of this policy, that's a denial because the building's been vacant.
Oh,
but going back to it, if we do our investigation and we say, hey, no, there was contractors, the owner was rebuilding. Well, then now it's not considered vacant.
right.
Right. So you know in the terms. So a lot of people are hurting themselves right from the beginning. Like that's probably the worst. As soon as they make that call with the initial claims department and then the initial adjuster, by the time it gets to us, a lot of the times it's too late. So yes, a lot of our calls for our first people that like our initial clients is when they're in trouble. But then as we've built our investors in our portfolio with all our clients and we have a personal relationship with all our clients, now we get, we're the first ones. So we're the first ones to inspect. We're the first ones to call the claim in. So everything gets done smoothly. And that's a really
correct
good process.
Yeah, that's a really good point. Have you obviously having to do damage control is where you first meet clients in the first degree. If we rewind even further back to a next step of not even them making the call to place the claim in the first case, what's the biggest mistake that most people don't look at when they're actually getting insurance for the first time, say on a property, whether it's multifamily, whether it's just a normal residential property, their primary place of residence, whether it's a single family home that's an investment property, a condo, whatever it may be. Is there any mistakes or any real gaping holes in all of that someone should be aware of when they're entering into the insurance space? Well, before there's a claim, but just in the initial onset.
Yeah, not understanding the policy. Like unless you interpret policies daily, like we do, how would you know what's in the policy, what endorsements you're supposed to have, what exclusions you shouldn't have? Right? You don't. And your agents don't really tell you. I was actually on a call today and we were discussing a claim that a client just came over. They had a fire at a gym. They're underinsured by half. They have an actual cash value policy. They have a co-insurance. I mean, by the time they're said and done, they're going to get 1/4 of that limit.
Right.
Because they have a penalty. So who's the agent that sold them that? That crap. To answer your question is not knowing your policy and you think your agent should know that, but they don't. We look over policies all the time and look if there's missing endorsements, if there's over exclusions, to look through it to make sure that the policy, that if something does happen, that you're aware that what you're covered for, how much coverage, like all that. I'm like, we do this all the time because again, you want to prepare yourself before something happens. You most likely, maybe you'll never have a claim ban, but what if you do? Again, this is it could be one of your biggest assets.
Well, I think that, there's something that I'd speak to on a personal perspective that's outside of the real estate side of things is that coming to North America about 10 years ago is that, I never really looked into insurance, even in Australia, where I was from originally. But the reality is that I came into North America. We bought a car, and then ultimately you just insure it with, say, like a State Farm or whatever it is that at the dealership or whatever it may be. You don't even look into it. You just make an assumption that it's going to cover you in case of an accident. And the things that I didn't know, being as naive as I was when it came to that, is that in Australia, there's more standardization of what needs to be covered and what the limits are. But for example, I then got connected with an insurance broker that ultimately was a trusted advisor within a friends group, and he looked at the policy that we had ultimately gone into just with the cars that we had bought, and he's like, "You've got you've got like the bare minimum. What is it? Public indemnity." And I'm like, what? I said, what is that? What are you talking about? He's like, well, if you run into, say, a power pole and you cause, millions of dollars worth of damage, this policy is only going to cover you for $100,000, and then everything else is out of your own pocket. Like, I have no idea about that. Like, I'm assuming that, and I'm assuming, maybe I'm wrong in assuming this, but 99.9% of people have no idea what their policy is really covering. Is that fair?
100%. That's so accurate. And because there's only so many agents like the one that you discussed that's trusted, that's been doing it, that actually cares about what he's selling, that he knows the policy. Most agents don't know. And if you ask, most agents that you ask now, can you send me a copy of the policy? And they send you a 3-page, it's called the declaration page. It's what your limits. That's not what I asked for. I wanted the full policy. Oh, well, we have to request it. Well, how are you selling something if you don't have the full policy? Like, you don't know what's in there. Yeah. It's kind of wild what's happening. Again, it is a free market, right? So anyone can sell, anyone can, there's buyers and sellers. So, besides a PA that knows policy, I mean, technically the agent that's selling you is supposed to know the policy and what he's selling you. And you kind of have that trust that you hope that they insure you the right way. Unfortunately, it's not the case most of the time.
It's unfortunate that it's one of those things that you only find out that you're not ultimately covered to the right extent when something bad goes wrong. So that leads me to the next part here. Moving back into the real estate space of things, and obviously business and commercial and all these things that you guys deal with, is that what are the biggest loopholes that you see from an insurance company perspective? Like, I think that it's tremendous advice. Like, it's funny, the guy who is our insurance broker, he actually said the same thing to me. Like, if you crash your car or something happens with the house or whatever it may be, do not call the insurance company or anything along those lines. You call me first. Okay. And I'm like, oh, really? He's like, yes, you call me. And if I don't pick up, call me again and I'll know it's an emergency and I will pick up. And it's like that. That's like one of the things that he said to me at the time, is like, you giving them too much information. It's not that you're trying to do anything in a criminal perspective or trying to hide anything. Yep. You are just trying to mitigate their ability to pay out. Because, again, I know this is more of a statement than it is a question. I'll get to it shortly. But isn't there, like, the question that I've got is, what are the biggest loopholes? And then what is actually the percentage of actually likelihood of somebody getting paid out most of the time if there is an incident?
Your loopholes, what do you mean by loopholes? Like, what are loopholes for the...
Well, like,
for the insurance company?
Yeah, like the house burns down, okay, or there's an earthquake or whatever it may be, and what are the things that they could go back on most of the time and say, no, we're not, you're uninsured because of this reason, like the vacancy thing that you provided us.
Yeah, so vacancy, that's been used a lot. Vacancy, we just had one in actually California. They called misrepresentation of the policy, that he didn't tell them that the tenant was growing, had a grow farm, or whatever, was growing weed, marijuana at the property. He never knew. He knew they were moving in. That was on. So misrepresentation of the policy, the vacancy clause. What other loopholes? I mean, when just besides fire, then you have the backups, right? The limits on the backups. Well, you have to understand what the difference between a backup is and a soft clog. When your pipe's clogged and water gets in the property, that's a whole different. That's different coverage, right?
So let's explain that for a second. So you mean that, so if a pipe is clogged and then it floods the house, versus if there's stuff that comes from the street or whatever it may be and comes back up into the house or something like that, what's typically uninsured and what is insured?
Yeah. So we did one in Tennessee. It was a big multi-unit building. It was a denied claim. We got involved. On that one. Looked through all the papers. Brought a third-party plumber. No, it happened where, they was denied because they said the insured does not have backup, sewer backup, water backup coverage. Well, technically it was a clog. The tenant clogged the pipes, then the water couldn't go anywhere, so it kept overflowing into all the units. So we got that overturned almost $100,000 later.
Wow.
Again, that's just using two different, right? Soft clog, sewer backup. Two different words used differently.
So your process, so let's say that, okay, so where is it? Obviously, if we've established a relationship with you and somebody comes to you and you help them out of a situation, the first case, and then you provide them their service of insurance, assessing and giving them advice moving forward. I get that. But like most of the time, what would be the process that you guys are involved in? So say that I have a property, it's in Virginia, it's a 7-unit building, okay, and something from a structural perspective happens to that property, right?
Mm-hmm.
And then the insurance company is saying, hey, no, you're not insured for this. That's when like, say that we didn't have an established relationship. Is that when I would call you and you would get involved at that point? Is that how it most of the time happens, first of all?
Yeah, so again, most people will find a public adjuster if they don't know about one. Usually once something's going on with the claim, like they'll feel, oh man, they're not paying me fairly, or it's been a month, I haven't even got an estimate. That's when they'll reach out to us. And hopefully that's within the time where we can step in and get involved at the right time. But again, for all our investors or clients that we've worked with that have multiple properties across the states, just like your listeners, we get called in right away.
Right.
So as soon as something happens, when do you want to involve a public adjuster? As soon as possible.
Right.
Because the quicker, not only is the claim, less likely to be denied or delayed, and then you're going to maximize every endorsement, the entire policy as much as you can.
Right. And then from there as well is that once you're involved, what are the things that you do at that point? So let's say that I call you from the very beginning. I've had some structural damage. The chimney on the property has fallen off the property, and it's ripped half the building off with it. Okay, and the company saying, so that happens, and I get notified of the event. I call you, Andy, and go, Andy, this has happened. Do you then reach out to the insurance company representing us? Is there a contract that I would sign with you that then engages you?
That's 100% correct. It's a letter of representation. Yes, we send the contract. We get that back. We send the insurance a copy. It's called the letter of representation. And then we call the claimant. We're the ones that discuss it, estimate it. Basically, we're leading the way, right? Instead of us coming from behind and then trying to investigate and figure out what happened and kind of work it from the back, we're leading the way. So now they're kind of following our thing. But as an investor, if you called me, Ben, and you said, hey, the chimney fell, I would say, well, there was no storm, so there's no claim to file.
Right.
I would say the wind was only 10 miles an hour. This fell because it's wear and tear, for example. Right. I wouldn't file a claim for you, right? What we do for investors, a lot of the times we'll look, and we've looked at $1 million claims, or they assumed there was, hey, we were told we have this big claim. All our properties have hit with hail or whatever. We've inspected them and say, hey, the dates, everything that we've collected, all the data, it doesn't match up. And if the insurance company sees this, they're going to come in and take their photos. And for a multi-unit right now, for big commercial properties and stuff, it's hard to get insurance. There's so many carriers that are, so they're going to drop you the carrier you have now, and you're going to have such a hard time picking up a new carrier, and the premium is going to be so high. There's no claim here for you guys to file. A lot of these people that drive around, whatever, the storm chasers or whatever you want to call them, and just want to file claims for everyone. It's not the case. I'd rather spend more time investigating and telling you no than putting a claim, and then in 3 months you're like, why do we file this claim if nothing's going to happen?
Yeah. It's funny, and again, I'm not using it in a property experience, is that I'm using it in, like, we had a situation where one of our employees had a work computer stolen out of their car, right? And it was insured under a certain thing, and we had coverage at work, thankfully enough. But the person that worked for us had it covered under their home insurance, and it was funny because it was our agent they wanted to obviously mitigate the problem before they told us, so they called their insurance guy, which was our guy as well, because we put him onto him and said, hey, I want to make an insurance claim on, it was a $3,500 computer, is a pretty decent computer that got stolen out of the car. And he turned around and said, no. It's not worth it, you making that claim, because your policy, your premium will go up X amount and you'll pay so much more over the long term. That's a very, very minor example of what you're saying, that in any property situation, say that something happens, the immediate thought for a person is go to the insurance company, but they don't think about the ramifications that even if they do get a claim paid out, what is the likelihood going to be of the insurance premium moving forward? Is that right?
That's 100%. You have the right agent. It's rare that people get the right agent that will give them that information to not file a claim, or hey, if it's filed, like that's the right thing to do. That's what we do for property, right? Yep. We'll make sure that if we're gonna file a claim, we're gonna go and it's a legit claim, that we're gonna maximize everything, and it's a legit claim. There's value that you're gonna get out of this claim.
So can you give some examples of some of the extremes that you've seen and situations that you've been in from a commercial or residential perspective? You gave an example of one where the pipe the tenant clogged it and then it backed up into the others, that you were able to get the coverage, the $100,000 that was owed at that point. What about some of the others? Because there's an example that I read when I was reading up on some of the information that you sent over, of something like the insurance company offered $3,000 and then you guys were able to get them $600,000 instead. That must be steam. The insurance companies essentially, without you guys involved, really are there to just steamroll people most of the time.
Well, you have to think. So again, they're a business. So if we step back and kind of look in their shoes, right, and step in their shoes, say, well, they're in business to obviously, to make money, collect premiums. If they can pay you $10,000 and the claim's 20, but you accept 10 and move on, I mean, that's their business, right? They're not acting and they're not doing it bad. They just offered you 10. Because the proof of burden falls on you, Ben, the insured. So you have to prove to them what they owe you. So in that case that I sent you for the 3,000, that's Dan Paul. There was a truck shop over here in Illinois. He had a large fire in his thing, right? Old school guy, repaired trucks. They didn't keep track of anything, right? Just old school. They would just focus on work. When the fire happened, they gave him an advancement of 3,000 and said, "Hey, listen, you got to send us this." They gave him a whole list. So for months, he kind of dragged. He's like, "Man, I don't know what I'm doing." He reached out to us. We discussed everything. He's like, "I'm going to talk to my wife." Then a couple months went on. It was like 6 months after. Then he called. He's like, "Listen, I talked to insurance. They're not doing anything else. I got to get them all this. I don't know what I'm doing." And then we got involved, and again, it was like 600,000, if not more. It was, we got in every endorsement, garage keeper's endorsement, everything endorsement he had. We were able to get.
Right, and then I guess that the thing that sort of is at the back of my mind here: how do you get paid? And again, it's probably a pretty aggressive question in this, but what are the fees and how does that work?
Yeah, no, not at all. Our fee starts at 10%. That's usually our standard fee. When we come in on a claim right from the beginning, it's 10%. If you were to call us maybe half a year later and say, "I got this much money, I don't know, I'm still feeling that I'm underpaid," well, we might charge a higher fee on the extra that we get you, depending on how much, where the claim is at, how much more value we can bring.
Now, if a claim,
but usually starts at 10%.
Yeah. Okay. Got you. Okay. So, and then is that paid because the insurance company, would they usually issue a check to you, to the individual, the insured, and then they would cash that, and then it's their responsibility to pay you, or is there an escrow situation that happens, or is there, how does that typically happen?
Yeah. So they'll issue a check. Yeah. So we collect our fee once the claim is paid, the full RCV is met, that we got the replacement cost figured out. They'll issue a check. And they'll usually have your name on it, our name on it. If there's a mortgage, the mortgage company's name on it. All we would do is either do a check exchange, where we will we'll take the check, we'll write out the check, another check to the insured minus our fee, or endorse the check over to the insured, and then they just write us a fee. So it's super easy. It's an easy process. And our fee is, if you look at our structure, it's the same thing as an agent, right? Yep. An agent collects his fee once he sells the house. If you were to do it by owner, right, because you think you could do everything yourself, well, that agent brings value. There's a reason they're charging a fee, because they bring value to you. There's a value in an agent. There's a value in a public adjuster. It's the same. We're the same, except they're selling houses. We're providing claims expertise.
Yeah, and again, I think that there's probably, again, not to take away from any of the sales side of things and the marketing elements that you go through when you're selling a real estate perspective, but the navigation of somebody on the other end that's really trying to, again, for lack of better terminology, trying to really screw you or get out of it is probably a little bit different when you've got somebody that, if you look at a realtor's perspective, selling residential real estate, doing it most of the time where you're selling a primary residence, someone's buying it as a primary residence. They've usually got a pretty genuine nature to get into that property and buy that property. You're not trying to navigate around somebody that's ultimately trying to screw you, which in essence is what you guys are doing. So technically it's a much different transaction, knowing that other company that they're running a business and their priority or their main goal is not to give you the money. It's a very different angle and different element. It's a bit more combative, I would say. Is that fair, or is that me being harsh about your industry?
No, that's 100% accurate. I mean, our job is to help the insured, is to get them paid everything they're owed. Not be, we're not trying to be shady. We're not trying to come up with numbers that are not accurate. We're trying to get everything that's to fully, the term that we use is to fully indemnify the insured. It's what the insurance company owes.
Yeah.
Right. And the company, and they get away with underpaying claims, denying claims all the time. So yeah, we feel, we provide a service where, we're helping, it's help. We're trying to help the insured get them everything they're owed. So then when they walk out, when everyone, and the claim's paid, that they're in a great situation.
Yeah.
And that's where they should be, right? They shouldn't be saying, holy crap, I don't got enough money to fix this building, or I don't got that, that shouldn't be the case.
What happens when, let's say that you've got a situation where the insured is underwater financially because the debts that they owed versus the money that you can get them versus the repairs costs, they're underwater. How does that work from how does that work from your fee perspective? You guys get your fee before, you manage the money coming in and everything like that. Is that right?
Yeah. When you're saying underwater, meaning they owe debt to them, they owe debt to the mortgage company, right?
Correct. Yeah. Or any lien holder really.
So there's a lien holder. That check would go to the lien. We get paid, but the check goes to the lien holder. Lien holder will pay the contractor of the insurance. Like he will work with they will pay in disbursements. They'll usually pay him 33%, 33% to the contractor for doing the work.
Right. Okay. All right. Understood.
So again, they're additionally insured on the policy, so they're going to monitor the claim. Definitely.
Yep. I think that, to round this out and sort of just to give everybody a little bit of a takeaway here, I think my biggest takeaway in all of this is that you've got to call Andy, for example, if there's an issue with ultimately something happens and you're about to make a claim. Before you make that call, I think you've got to make sure that actually, this is actually a good question. Police reports. Let's say that property burns down, police will come and investigate it. The statement that you have to give them or whatever it may be, or it's like a car crash or it's like whatever it may be, the police involvement in all of this, is that one of those things that people have to be conscious about what they're telling the police or the authorities in that situation, because it can be held against them later, or what's your viewpoint on that?
So usually during fires, we don't usually see the police that often. It's usually the fire investigator. So you'll have the fire investigator, you'll have the CS, not CS, what is it called? I'm just blanking right now, but it's someone that investigates how the fire started. Those people are going to ask you questions, right? So when our insurance getting asked questions, we'll be with them, we'll prep them before the questions, kind of what they expect. And then there's the examination under oath. That's a big one where the insurance company can pull you into their attorney's room and do an examination, right? And that's when we always advise that you need an attorney present. Right. If you're going under examination, it's time to get an attorney to, not to handle the claim, but to be present during that examination.
Okay. Yeah, just to make sure that they don't incriminate themselves in any way without knowing.
100%. And that's how that insured in California, I was telling you that I mentioned before with the weed, he went under oath without an attorney. That was before us. And that's how, he said something else to the adjuster. Then under oath, he said something else. And that's where it said, well, he's misrepresented. The guy was he's just all over the place. He's just on it. We discussed this claim with him. And it's just unfortunate that, again, they're just holding it against him. So. Yeah. It would have never happened if we were involved earlier. That's what sucks. You go back God damn it. If we got involved 2 months prior, none of this would have happened.
Again, I think it's a really valuable lesson to learn. I think that, with all due respect, Andy, I hope that nobody has to ever call you. But at the same point in time, I think that it's really important, though, that they have a resource like yourself that they can have. Your information is going to be in the show notes so that everybody can reach out to you. They have a good, firm understanding of what you're doing. To close out the episode, though, I just want to obviously talk from a personal perspective. Obviously, you're very successful in what you do, and you're a guy who's gone through the migration pattern that I've gone through, coming from Poland and now moving over to the States as well. How long have you been in the States?
99. So that's 15 years. Is it 15 years? Yeah, right. 15 years. I think.
Yeah. No. If 99, it'd be what? That's 25 years.
25 years. What did I say?
15.
Did I say? No. 25. Sorry, 25 years. Yeah.
There you go.
25 years. Yeah, it flew by. It feels like 15 years.
That's it. There you go. Well, one of the things that we like to share on Rethink Real Estate is any podcast or book recommendations or maybe a life hack or something along those lines, just to sort of round it out on a different topic. Is there anything that you want to share with the audience?
Yeah, I'm a big, one of my favorite books is Slight Edge. To not obviously to say the obvious, Robert Kiyosaki, that's an obvious one, but one that I like a lot that I've read multiple times is Slight Edge. It's a great book, easy to read. The audio book of it is actually great. And I'm a big Jim Rohn guy, not a big podcast in terms, but I do like Jim Rohn. A huge guy that I like to watch his YouTube videos, his old mentor. I think that's who he actually taught. He was a mentor to Tony Robbins. So.
Okay. All right, great. And then I guess that as far as it goes with AllCity, the company that you're working with, the AllCity Adjusting, is it your company? Is it a bigger conglomerate? What's the landscape of that?
Yeah, I am the CEO of the company. We're growing. We're in 35 states right now.
Oh, wow.
We specialize in large fire claims, large water losses. That's our specialty. With some of our other investors, we'll handle some of their smaller claims as well. But that's kind of how we fall into place. Now we've built it to 35 states and we just kind of keep growing from there.
Well, congratulations on your success. Thanks for being a resource for the people listening to Rethink Real Estate, and looking forward to, again, building and establishing a relationship to make sure people get the most out of their insurance company.
Ben, thank you so much for having me. Good luck to you guys. And again, thanks so much.
So about 75% of our audience hasn't liked, followed, or subscribed to our podcast. It would mean the world to us, and it would help this podcast more than you know to expand our reach if you were to like, follow, or subscribe on any of the platforms that you're watching or listening on. Thanks again.